Welcome back to the post-lunch session on day two. Just to remind you that our charity, the Conference Charities Meningitis Centre of Australia, who are offering this book called The Miners. It's a hardcover book, which is available, a limited number of them available at the desk opposite the registration desk. Together with this book on rocks in our heads, the stories of exploring for mineral deposits in exotic lands. The proceeds of this book go to the Meningitis Centre of Australia, and I think it's only about $10. So get into it and get into it quite quickly. Now, this next session is sponsored by Australian Mines and Hagstrom Drilling. And joining us is Peter Swan, who's an experienced geologist with a background in mineral exploration and development in both management and consulting roles. He is a founding managing director since the company listed. Peter has applied his sediment-hosted gold theory to generating new projects in Australia. Aruma now has 4 new gold projects on major gold-endowed structures in Australia's new gold hotspots, namely the Pilbara, south of Norseman, and the Lachlan Fold Belt. Today, Peter will detail the progress being made at Aruma's existing gold projects with the results of the newly discovered saltwater gold domain, and he will also be slightly provocative in his comments, as is his usual wont. Please welcome Peter Swan.
Thank you, Jerry. I'd like to thank the Stuart and the RIU for the opportunity. Thanks for the sponsors, and thanks for all the shareholders and the people that have come to listen to me. So I'd also like to thank the traditional owners of our areas, especially the Jitty group. Without them and their very, very helpful attitude, we wouldn't be able to be presenting today. Now, the question I have to ask is, why do we want to do greenfields exploration? We put out good results this morning and bang, down we go. But the rewards are great. They're there. De Grey and Chalice prove that. So that's the rant. The rant is over. So a little bit about, there's a disclaimer, and there's our the basis of Aruma. We did a reconstruction. This is dated yesterday. So we've got only a small 106 million shares, a lot of shareholders, and we've currently got about $3 million in the bank. So we're off and we're exploring. And where are we exploring? We're exploring in gold belts that were unfashionable, and we're looking for gold in sediments. And that's a very, very similar line that you would have heard from me over the last 10 years or so. But we've changed our approach, we've changed our location. We're up in the Pilbara. Why in the Pilbara? Because in January, February last year, it was unloved, and Hemi came along, and we're up there. So we've changed the direction of the company. The Aruma, we've got basically 4 strategically located projects, and we're in West Australia. We've also got a Mount Dean's lithium project, and we've just completed our successful 1 for 15 reconsolidation. So here we are, we're in the Pilbara, and the Pilbara is a great area. We're on the slightly less fashionable Nanjalgardi Fault, not the Nolan Fault up to the north, but we're on the basin. The Pilbara is the largest hydrothermally altered basin, I believe, in the world. It's got the biggest microplaty iron ore mines in it, little thing like Mount Whaleback, 2.5 billion tonnes of microplaty hematite. It's got the woody, it's got good gold, Telfer, Hemi. It's got good gold at Paulsons and at Mount Olympus, and we're in that belt. We've got 2 locations on that belt. We're also at South Scotia. The story that Pantoro and Tulla are doing at the moment is very exciting. We're in the Lachlan Fold Belt, just to the east of Canberra, a little place called Bywong, and we've now got back the lithium tantalum light rare earth project down at just south of Norseman. Go to the Pilbara gold projects, and you can see here the Nanjalgardi fault is a very large crustal suture. It's pumping up, it's pumped up a lot of fluids, very hot fluids, and these fluids have caused very good gold projects. Billy Beamont, he has got a lot of kind words about Paulsens. It started his career. And he's made the statement that it would be very unusual for the fact of Paulsens being the only gold mine within 50 k's. I think Mount Olympus is similar, and all these gold mines are in active sediments, and they're on classic structures. So we'll go in now and have a look, and we've got 952 square k's of brilliant country. Saltwater Gold Project. Why have I got the Saltwater Gold Project? Well, an old Aboriginal stockman friend of mine found nuggets there. We pegged it, and he's got a share in it, and we have just drilled it. The point to see here is this stratigraphic column here. The area to look at is between Mount McGrath and the Duck Creek Dolomite, and that's where Mount Olympus is. And our area, as you can see, basically consists of all of this material, Ashburton Formation. That's what is mapped, that's what was thought. We had a look at it, and we've got this magnetic ring structure. And this ring structure is a pretty simple structure. It's just a dome of the attractive Duck Creek Dolomite Mount McGrath Formation poking up through the Wailu Formation, and that's where we know that there is gold. How do we know there's gold? Well, we drilled it, and the previous drilling had only got a 0.2 grams per tonne here and a 0.2 grams per tonne there. So we have just released this yesterday. We drilled it. We drilled 4 lines over the area where nuggets had been found, and we drilled 2 lines out here undercover. These 2 lines are structural. These lines were closer together, and we drilled a total of 40 holes. The RC. Why would you drill RC first up? Because there's some chert and chalcedony over here that's as tough as concrete. And anything but RC would bounce off it. So what have we got here? We've got the Nanjalgardi fault, we've got this good structure, we've got an area that's some 60 square k's in this ring structure, and we now have got the proof of the pudding in. No. Nope. No, the green arrow is not working. The light comes on, but there's nobody home.
That one there. Case of operator error.
Okay, to advance it, you press the laser. I get it. Okay, so we drilled 40 holes. We've got 37 sets of assays back, 37 holes. 14 of those holes produced intersections greater than 0.2 of a gram. Now, this is greenfields country. These holes are drilled over 4 kilometres. And to get that sort of result, I find very exciting. Nobody else did. The dreaded technical success. So we've used those assays, and they define and prove the structural trends. We're going to go up and re-assay the 4 metre composites that we've got in the eastern zone. So what does it look like? What we've got here is we've got, we drilled around about 3,600 metres in this country, just here, and we drilled 900 metres in 2 lines there. There's a couple of holes that haven't come back just there. There's 3 holes. These holes were drilled in November, December. We got them on the truck in November, December. We're getting the assays back still. The poor old laboratories suffer from being run by people who have not much faith. They get a 1-month downturn, they sack all their chemists, up comes the boom, bang, we're buggered. So we've got the anomaly, we confirmed the anomaly. We've got the results up to 1.26. We've got the ring structure, and it's somewhere between 60, 65 square k's. But the big thing is it's got around about 40 kilometres of strike length in a circle. And we know now it's at least 4 k's long. The outcomes. This is the section through the line to the east. And the takeaway here is we've got this supergene blanket. And you can see that this supergene blanket is somewhere in the vicinity of 300 metres wide. It is not it's not an economic mining proposal, but what we're saying is that's a lot of gold. And they're just under half a gram, and between 0.1 and half a gram. It's a lot of gold. It's come from somewhere. It's in an old surface. And if you had this sort of a reaction with soil sampling, you'd be pretty excited. So we've got follow-up drilling to be planned. We are consulting with our geophysical friends to see if there's a silver bullet so that we don't have to drill too many holes. And we've got an EIS application in, and we'll hope that that will be forthcoming. We'll now go over to the Melrose project. Melrose is basically the old name for Paulsens. We couldn't call it Paulsens, that would be a bit plagiaristic. Not that I mind plagiarism, but the point is we've got a very large area there. We've got 216 square k's. We've got the area just around Paulsens. That's the Paulsens mine. And this red rectangle there is where we did a advanced mineral mapping exercise. The takeaways here will show in the next, but there are very, very good thick intersections of 27 metres at 0.3 of a gram. So there's good gold. The area we're going to drill as soon as we get the clearances is Gossan Hill. There's good grades there, good thicknesses, and they were looking at a north-south trending structural zone. We're looking for a lithologically rock-controlled zone. So here's a beautiful diagram. This is called an orgasmogram, and what the takeaways here is the stratigraphy shows up, and we put these, we pegged our leases on this corridor that we devised, and this very, very sophisticated mineral mapping proved it up. You don't want to see that. This is where we're going to be drilling as soon as we can, and this has got the Paulsens ore body drawn to scale on it, and you can see that it's in the right structure. It's got very, very good gold assays. It's got grades coming up that are very attractive. So we believe this is a walk-up drill proposal. There was a soil sample here, anomaly, but there was no soil sample here because this is siltcrete calcrete and it's as hard as concrete. So we are very, very happy with that project. We've got the Belvedere as well to the south, and that will be drilled as well. As you can see, they're all on the Nanjalgardi fault. They're all in good reactive sediments. Scotia South. Kevin Maloney from Tulla, as soon as Pantoro put out the Panda discovery, which is just to the north, up at Scotia, he sent it to me straight onto the wonderful 10-graph web, and we could see the stratigraphy, and there was a big vacant block of land down here. Antonio Rivera drilled these holes around here for nickel in 2003. It's a great land holding. It's got gold credits, but the takeaway is that all these things occur on these large productive faults. That fault there goes to Tropicana. So she's a pretty good fault. I believe this will be a standalone mining operation, but the ore zones are to the west of this banded iron formation. So our targets are down here. And what does it look like compared to Scotia? This is a map from Pantoro, Scotty Hufferdine, and they've got these various discoveries, but what you can see, these are stratigraphic. These are in the stratigraphic lines. We believe we'll have those three zones down where we are. Why do I like it? Because it's thick and it's good grade. The area over in the eastern states has got good gold. That's this 90 metres at 4.14 that Sky found. And it's on an offshoot or a splay from the Lake George fault. We've picked up these areas. These are gold occurrences. Canberra's down here, Lake George is there. It's a good area to be in. So where are we at? We've done our drilling, we've put out the results. We've got cash, we've got great projects, we've got the people, and that's our exploration pipeline. We're going to be drilling, and there we go. And the good thing about our money is that we spend our money 1.5 times. These are the R&D returns that we've got back since I took over in 2011. So you can see we've got 4 million, about the same as a float. So thank you very much. And we are in the booth 34. Please come and see us. Thank you, Jerry.
Thank you, Peter, for that slightly X-rated presentation. Corazon Mining is developing 2 assets with the potential to supply the emerging EV industry. They're at the Mount Gilmore Copper Cobalt Gold Project in New South Wales and the Lynn Lake Nickel Copper Cobalt Sulfide Project in Canada. At Lynn Lake, several new areas of mineralization have been discovered, utilizing new exploration techniques with a modern understanding of the nickel, copper, cobalt sulfide systems. Corazon is currently drilling at Lynn Lake, targeting new geophysical conductors. Brett Smith is Corazon's managing director, and he joins us now. Please make him welcome.
Thanks, Jerry, and welcome everyone to the Corazon Mining Talk. I'm having the same problem. There we go. If you want to copy this presentation, it's on our website. It's also been released on the ASX platform. Corazon, Perth-based junior exploration company with projects in Canada and Australia. The board, very experienced with respect to exploration and project development. We've just gone through a share consolidation, so we've got 162.7 million shares on issue. Cash is a bit tight, considering we're drilling in Canada at the moment. But we have our full capacity and there's a lot of interest in what's going on the ground. 2 quality projects, as Jerry said. In Canada, we own 100% of the entire Lynn Lake mining camp. It's got very good, high quality JORC resources. The brownfields exploration potential is proven. We will add to that resource. And it's got very exciting greenfields exploration potential as well. In New South Wales, the Mount Gilmore project, it's a copper, cobalt, gold, silver sulfide project. We've generated very large regional geochemical anomalies over a 20k strike. It's an early exploration place, so completely different to Lynn Lake, and it's developing quite well. 2 things happened last year on both projects that have really changed the exploration focus. In Canada, we trialled an innovative geophysical method, which has completely changed our focus of exploration on that project, and we're currently drilling that first highest priority target as we speak. In New South Wales, we identified a mineralised porphyry right beside a major geophysical anomaly, right below the biggest copper anomaly in that trend. It's really significant in that it brings together a lot of geological factors into one concise model, and we plan to drill that target the first half of this year, as soon as we can get a drill rig. Today, I'm only talking about Lynn Lake. If you want to know more about Mount Gilmore, we've got a lot of technical information at the booth. Come and speak to Dr. Ben Lee. He's our senior geologist. He's a whiz on these kind of things, so please drop by. Right, I don't want to say too much about this, but there's a growing desire to reduce pollution in an attempt to influence global warming, for better or worse, or right or wrong. Our tools to do that is the take-up of electric vehicles and renewable energy. Now, both those tools rely heavily on battery storage and battery power. Without battery storage, excepting for hydropower, renewable energy is ineffective and inefficient as a baseload power supply. So the global production of batteries needs to accelerate to really accommodate these kind of targets that the governments have set. China has recovered from the COVID virus. The battery industry there is booming at the moment. There's also a desire to really pull away the dominance, the reliance on China and have new battery production centres in growth areas like Europe and the US. So that's happening as we speak. There's not enough class 1 sulfide, nickel sulfide in the world defined as resources or even exploration targets to satisfy this demand coming up. So that's the environment we find ourselves looking at Lynn Lake with rose-coloured glasses. Lynn Lake, it's an advanced project. It's got large JORC resources. These were previously measured resources as far as the NI 43-101 Canadian system goes. We pegged them back to indicated. They're drilled out. They're drilled out to 12.5 metre centres. They've developed down to about 1 kilometre below surface. So all that is sitting there waiting to go. They're not something that we have to prove up or spend a lot of money on resource definition. Metallurgically, completely de-risked mine for 24 years. Our modern metallurgy has improved on what happened in the past. We, for the first time, created high value, high grade concentrates, separate concentrates for nickel, cobalt and copper. It's not remote, the infrastructure's all there. The township was built for the mine. It's just about got everything. It's got a sealed airstrip, new hospitals, shops, et cetera, et cetera. So it's a lot of CapEx is spent in the past, which will benefit a new operation. It runs off hydropower. There's 2 hydro schemes there that were built for the mine back in the 50s. They're still operational. It gets the green tick of approval for that, but also hydropower is just such an enormous cost saving compared to other power sources, and it really does affect the OPEX of the operation. There's a lot changed since the mine closed in 1976 as well. We're a lot closer to the markets than it used to be. In the old days, Sherritt Gordon, who operated the mine, they railed the concentrate out from Lynn Lake all the way across to Fort Saskatchewan, where Sherritt Gordon had a processing plant. That is now one of the lowest cost operational H-power plants in the world. Sherritt have just produced their 5th billionth pound of nickel, and they transport their concentrate from their mining operations in Cuba. So that rail link from Lynn Lake to Sherritt still exists. Of course, once you hit the rail, you have access to all North America. Where the North American battery industry is going to find itself, who knows, but that's an option for us at Lynn Lake. And also more recently, there's a railway line that has, since we've been in Lynn Lake, has never been operational, but the federal government jumped in last year with the local communities, and they've revamped this railway line. It's looking for business. It can take concentrate loads. And really, once you've got to the port of Churchill, you have access to all of North America, and you're on the doorstep of Europe. So this has all happened in recent years. Right. We first got involved in Lynn Lake because of the exploration potential. Over the last 10 years, we've grown it, whereby in 2015, we picked up the mining centre. And we're the first company to have all this district under the ownership of one company since mine closure in 1976. We are very much focused on exploration. In saying that, we've continued to de-risk and progress the development opportunity at Lynn Lake. And I'll take you to have a look at the mining centre first. Okay, this is a plan of the mining centre. You've got the satellite L deposit, which is there in the long section, and all the deposits up in the A plug. There's 2 separate intrusions there. Our resource areas are in purple, so that's about 16.3 million tonnes of resource at a 0.5 cut. At a 0.4 cut, there's about 40 million tonnes, not quite 40 million tonnes of resource material sitting there. So these are big tonnage operations, low grade, but the stopes are 40, 50 metres wide. So they're quite massive things. They're not like the narrow, high grade things we get here in Western Australia. There's probably as much metal still in the ground as historically mined. We know that. We've been focused on, I guess, identifying some surface tonnage, and our belief is if we can identify 2 to 4 years mine life in open pit before committing to the underground or doing the underground development, it'll be very good for the project. Last year, we drilled some holes around the A shaft. So that's in there, and you can see those very high grades we got from surface. So we're well on our way to identifying this 2 to 4 million tonnes. We know we've probably got about 2 million tonnes of optimised pit around the L deposit, and this other material in the A plug is looks like it's going to have some good grade and good startup feed. Exploration-wise, deeper down in the mining centre has also been quite good for us. We've discovered the L deposit at deep. It's a high-grade sulphide breccia, very difficult thing to drill from surface, and our senior geologist at the time, Andy Thompson, did a very good job to hit this thing, but it became quite difficult to drill. It's open in all directions. It's probably an exploration front for high-grade mineralisation for an underground operation once it gets up and running. And there will be other things like that. We know the northern extensions of the end deposits, so the good geophysical targets there, some drill indications of mineralisation, and all up on that eastern side of the A plug looks very interesting. Standing back regionally, we've had a lot of trouble regionally identifying, I guess, exploration targets. We've had to rely on things like magnetics and IP. We haven't been able to use the go-to tool EM to identify massive sulfides. It just doesn't work in Lynn Lake. The way the Canadians do it is one thing. They don't have the same power that we put into the ground over here. You just can't cart that equipment around the ground. And because of the surface conductance, we just don't get the penetration. Last year, we stumbled on an innovative method that Vale were using in Sudbury. We trialled it over the whole project area, and it seems to have done a very good job. It's called Mobile MT. It does recognise the surface conductance, but it's not a time domain type system, and it sees to great depth. The resistivity component of this method sees down to 2.5 kilometres. We've been focused on the top 1 kilometre. Our eyes instantly got drawn to the western side of the Fraser Lake complex. Fraser Lake has been our major exploration front, I guess, at Lynn Lake, and we've hit a lot of sulphide down there, but we just haven't been able to nail the massive sulphide. And zooming in that area, the entire model now for Fraser Lake has changed. I'll explain it quite simply. What we have is 2 newly identified vertical pipes, which provide, I guess, a vertical structure for your and channel for your magma to come up. And then everything looks like it's flowed laterally, horizontally, up into the Fraser Lake complex with the matrix trend and across to the matrix trend. This horizontal movement is very important. A lot of the major deposits in the world have lateral and horizontal movement of magma. It's how you get the sulfur into them to melt and precipitate out the sulfides. Some interesting things from this is that where we've drilled, mostly where Corazon's exploration focus was on the matrix trend up through there. We drilled about 11 holes into the matrix trend. It's an IP chargeability anomaly that identifies disseminated sulfides typically. Every hole into the matrix trend was chock-a-block full of sulfides from weakly disseminated right down to small zones of massive sulfide, but we never again hit the big zones we were after. Just looking at that same area, now this is a resistivity map, but we switched the colours around so the hot colours are conductive areas. And you can see right at the end of the matrix trend, you've got this large conductive feature that sits out there. We think that that conductive trend is a good place to look for massive sulfides deposits, which are usually very good conductors. Matrix trend itself, you can see in this map, it's not conductive. So where we've drilled, those those white and black dots, and where historically the old timers drilled, the yellow dots, not conductive at all. If you use VTEM on this system, if you use ZTEM, GeoTEM, ground EM or downhole EM, that entire Fraser Lake complex to the north, where its drilling was conducted, is conductive. But in this method, it's not conductive. And that's a depth slice through about 250 metres below surface. So we're dealing with 2 completely different environments now. We were exploring before, in our opinion, not as favourable as where we're about to drill. Some of the drill holes we had in the matrix trend were quite good, and you can see that 22 metres at 0.7% nickel wouldn't be out of place in the resource area, and if it's in the right place, it could be in a mining envelope. So we've got a very good sniffs, very good encouragement, and everything has vectored us towards that our first drill hole, which is number 24, sits down there. Just be warned, this long section here is looking south, not north, as we geologists like to do, and it's located in there. So that's what it looks like in cross section there. Tilted depth slices used in Geosoft software. So it's a bit of a funny image, but it does tell you the picture of potentially this magma coming through the country rock and and being a flat ponding type system. Another thing I want to just talk a little bit about are these south pipe anomalies down the south there. They are the most prominent geophysical conductor anomaly in the area, in all of Lynn Lake actually. And so I just spent a bit of time through that. These are two depth slices, one at 250 metres below surface, that one, and the other one's 100 metres down further. And you can see the south pipe conductor anomaly gets bigger and bigger as we go down. We can trace that over to the full depth extent we've done this kind of work to, and that's 850 metres below surface. It actually joins up to that magnetic pipe to the north, and it's quite a big system. If we had to pick a model for this style of anomaly, we would pick the L plug in the mining centre. That only existed down to about 250 metres before it pinched out. It was a high-grade sulphide breccia, produced about 2 million tonnes at 2.4% nickel, 1.15% copper down to 250 metres. Extremely rich, really did completely change the mining operation at Lynn Lake. So we've got 3 times in an anomaly, we've got 3 times the depth of what you see at the L plugs. And this is a major drill target for us. We're currently on hole 24. We've had to deal with a polar vortex sitting over us for the last 10 days, colder than minus 40 degrees, and it's been a bit hard on equipment and men. Last night we were down about 32 metres down this hole. We've got 1 full night shift in. We won't have 1 full day shift, sorry. We won't have night shift tonight, but tomorrow we should be 2 shifts and running pretty smoothly. The next target, if we can get a track into there, will be the south pipe. So that's where we are. So please watch out for our announcements on that drilling. Right, in summary, 2 minutes ago, in summary, Corazon Junior with Junior Nickel Explorer with some pretty good resources. There's not any junior with 116,000 tonnes of nickel metal in this quality resource at all. Closest rivals with a similar size resource would be about $160 million market cap. We're less than $10 million. So we think that Lynn Lake is developing very nicely, and we've got confidence that with an increasing nickel price, and it's the highest price this morning for 6 years, more than $8.50 a pound, we believe Lynn Lake is a real development opportunity. And we also believe that this exploration targeting these conductors is going to be very successful. So thank you very much.
Thank you, Brad. Corazon, a junior with adult attitude. Calidus Resources Managing Director David Reeves is a mining engineer with 30 years of experience in the mining industry, predominantly in the precious metals sector. He's been involved in the development of 3 mines and has extensive experience in international capital markets through his involvement with various listed London and Australian companies. Please welcome Dave Reeves.
Thanks, Jerry, and a very good afternoon all and everyone who's watching online. Thanks very much to the crew at RIU for putting this together. And before you all go and spend your last money on Calidus shares when I finish, just remember the Meningitis Centre, great charity that Stewie's organised this year. Give generously. So Calidus, we are fully funded to develop the Warrawoona Gold Project. We have commenced early works. We'll be starting main construction this quarter. And when up and running early next year, we'll be producing 90,000 ounces per annum over an initial 8-year mine life. But we certainly believe that will go on and on from here for a lot longer. $1,290 all-in sustaining cost an ounce. Gold price obviously down a bit overnight, but still a very healthy margin. And we have locked in our hedge previously as part of that funding. In addition to that, shortly this quarter, we'll be releasing the Blue Spec integration study. Blue Spec is a super high-grade resource, 219,000 ounces at 16 grams a tonne. We're purchasing about 70 kilometres away. We'll be bringing that into the mine plan, and that obviously is going to increase production significantly on an annual basis. What's Warrawoona built on? It's 1.5 million ounces around the main Klondike deposit, but we're looking to expand that through regional and near mine exploration. I'll take you through that a bit later. This time last year, I think we had about 5 people on our books. We've got about 20 now. We're getting some really fantastic people on board into our senior positions as we move into that construction and operation phase. And that's an absolute essential for your success moving forward. As is ESG. Funnily enough, after much deliberation, being on a doorstep of Marble Bar, the hottest town in Australia, some bright spark said that solar energy might be a good way forward for us. So we're putting in a big 2 megawatt solar system as part of our power solution. We'll also be sourcing LNG locally. We'll be trucking that in from the Northwest Shelf instead of diesel, all to reduce carbon. Not many juniors or not many operations actually in Western Australia do cyanide destruction, but certainly as part of our program moving forward and protecting the local fauna, we'll be doing cyanide destruction. We have a 32 hectare conservation zone of old workings for some of the bats around us, and we'll be contributing to the Pilbara Offset Fund. Socially and in the community, we're upgrading the Marble Bar Airport, we're upgrading the Corona Downs Road. We currently sponsor Indigenous art programs in 2 schools in the area, and we'll be establishing opportunities for local businesses and apprenticeships, and we actually have 2 local contractors on site. Very topically, heritage, done extensive surveys, and we've actually managed to move the mine plan around, so there's absolutely no disturbance of heritage. And rather uniquely, when it does rain, it does pour up there in cyclones, we'll be harvesting that rain via Valleyfield Tails Dam, take a bit of stress off the local aquifers. Brief snapshot on the company. I think the main things to look at here is that we have an enterprise value of around 115 million. When we look at our EBITDA later, remember that number and think about Blue Spec getting added to it, that high grade resource, that EBITDA number will only go up, and it makes our enterprise value, I believe, look like there's a lot of upside yet to be had. The Pilbara was previously mentioned as a place to be. I certainly couldn't agree more. If you have a look yesterday, Novo poured their first bar of gold from their Beatons Creek operation in Nullagine to the southeast of us. Capricorn will be pouring gold later to the south of Newman later this year. We'll be pouring gold early next year. So this is certainly an epicenter of gold development in Western Australia. De Grey obviously out there kicking goals and a lot of other deposits as well. So a fantastic place to be from a gold perspective, but also infrastructure and some of those points I went through before with LNG, airports, roads, etc. The project itself, it's a very simple, large, open pit and underground, conventional to 2.5 million tonne per annum CIL plant. We've got a mineral inventory of around 700,000 ounces over that 8 years. The CapEx around $120 million, which will break down a bit later. And as I said, we're fully funded. That's through $110 million of debt with Macquarie Bank, 42 million cash in the bank at the end of last quarter, and 125,000 ounces hedged at 2,355 an ounce. This is a bit of a view of site, accommodation village in the foreground, which is now almost complete. We've only got one last row of dongas to put in, so this is slightly old, this photo. Access road going around, communications in, water bores are in, and we're just waiting on the final approval of the mining proposal, which is imminent, before we start clearing that processing plant location. These are some of the pictures on site. It is not the Club Med of the North, but it's very close to, with views like that, and certainly a pleasure to stay up there when it's operational. And that obviously needs to be in place for our main construction to kick off in this coming quarter. So great to see the progress that's being made up on site. And we certainly are quite active on social media, posting regular photographic updates if anyone is interested in keeping tabs on progress. The resource of 1.5 million ounces at Warrawoona is mainly at Klondike. It's divided into open pit and underground. The open pit is obviously what we feed predominantly in the early years. We've drilled it intensively on a 12.5 by 12.5 spacing to minimise that risk to grade for the first year, and beyond that, a 25 by 25 spacing. The 2 red dots at the bottom there, those are recent drill holes we've completed. We hit 4 and 5 grams. These were sort of wildcat holes, 300 metres deeper than anything we've drilled, keeping in mind that resource is only down to 250 metres. So to hit gold at that depth gives us great confidence that as we get to know this ore body, get to understand its high-grade shoot positions, we'll be able to show a lot longer life at Warrawoona than is shown in the current 8 years. Looking at that pit in a bit more detail and looking at the reserves, That 12.5 by 12.5 area is at the top of the pit, and you can see the magenta colour. That's obviously higher grade, and what we're finding, the more drilling we're doing, the better the grade comes from that. You'll also notice that that gold literally sticks out of the ground. So our biggest problem at the moment is trying to find enough waste to build the tails dam and the ROM pad, which is a fairly unique problem and a very nice problem to have, but one that's still giving a few head scratches at times. Very low strip ratio, 3.6 to 1 over the life of mine at a 0.3 cutoff and 4.8 at a half gram cutoff. Talked about the capital costs. So we've got a lump sum contract with GR Engineering, they've ordered the SAG mill, they've ordered the equipment. Main construction kicking off. We'll begin with bulk earthworks, and they'll be on site in April pouring concrete. So that'll be a very exciting moment at that point. And outside of that, as I said, we'll be doing some other works, which is the village is complete, but we'll be upgrading the airport, putting in the tails dam, and a few other bits and pieces around to arrive at that $120 million capital cost. On an operating cost perspective, $12.90 an ounce, it's a pretty flat profile on the costs. Bumps up a bit in years 4 and 5. That's when we are really setting up the underground, and then we start harvesting the underground in years 6 and 7, and that's why the costs come down. But generally speaking, it's a very solid cash producer from day one. Again, keeping in mind there's no massive pre-strip. The gold is outcropping at surface, so we're straight into cash flow from day dot. We peak at just over 100,000 ounces per annum on the feasibility study. But again, when that blue spec study comes in, we're certainly pretty excited about the results we're seeing, and that will obviously increase that quite substantially, and I think really give us a leg up in visibility as a company. So putting that all together into the feasibility highlights, there's various gold prices you can use. As I said, we have hedged at 2,355, so a bit in between the 2,250 and the 2,500. And then that price, we're doing just under $100 million per annum in EBITDA. Remember, that's roughly where our enterprise value is. Bring blue spec in on top of that, and that's why I think there's a lot of value still to be had in Calidus as we progress towards first gold early next year. So that's the project. That's obviously taking up a lot of time and a lot of focus, but beyond that, there is a lot of exploration. And as we've got to know the area and as we've developed Warrawoona to a certain state, we've certainly begun to put our foot out and try and put our foot on a few tenements in the area. Blue spec, you can see, sits to the southeast of us, about 70 kilometres. And without a doubt, at 16 grams, that will be a mine. So we'll have a base set up there, a camp, we'll mine it, we'll truck it back to Warrawoona, a hub and spoke model. But with that camp down there, it enables us to look at other options in the area. So we have joint ventured up another 5 kilometres of the blue spec shear that's never been drilled to the west of blue spec. And we're also picking up some other ground along that shear further to the east. And certainly we'll be getting on the ground in March. We've now got 2 regional geologists in the team. There was a title of regional geologist last year, but poor guy never got out in the regions. He was stuck on a drill rig getting ready for the DFS. So that will be quite exciting to see what comes of that. We flew detailed aeromag and radiometrics over Warrawoona last year. The 2 regional geos have been picking through that with Southern Geoscience. We've got a lot of targets. They'll be out truth testing those at the start of the field season in March, and we've allowed a budget of 2.3 million for exploration this year, which will start to take on some of these greenfield exploration plays, and we'll see what comes from that. A little bit on blue spec. So 2 ore bodies separated by about 1 kilometre along strike, been mined in the 70s, as I say, 16 grams. It is an ore body that requires flotation. We will have a little flotation circuit to the side of Warrawoona. So we'll produce gravity gold, a flotation concentrate, and also then we'll put the tails through the CIL. So we'll get about 20-25% of the gold through the Warrawoona gold plant and 75% through concentrate sales, but a very simple circuit in that, and one that we see as very low risk. Scoping study out this quarter, DFS out around first gold pour, so that when things settle down at Warrawoona, we can press a button on this and bring this in as quickly as we can, because you don't often get 16 gram ore bodies. In fact, I think it's the first one I've been involved with, so it's an absolute pleasure. Timelines for everything. So our next major milestone is to get our operating permits. That's a mining proposal and works approval. They are imminent, so expect an announcement shortly on them. With that, that's the starting gun fired. We're off and away. We're into the bulk earthworks, then the civils. Sometime in Q3, we'll begin pioneer mining. That's taking the top off the hills, stockpiling some ore, trying to find enough waste to build the ROM pad. And then main mining commences the beginning of next year, with mill commissioning starting late in Q1 and first gold into Q2. I've mentioned Blue Spec, the study coming out March quarter, DFS about the same time as the gold pour. And then, as I said, we've got the drilling. Fielding's Find is around the Warrawoona area. We'll be doing some drilling at Blue Spec for metallurgical and geotechnical testing, and there'll be some absolute boomer results in that, which will be great to announce based on what's been done previously. So some pretty good news flow ahead for the rest of the year, but obviously the predominant focus will be on building within time and within budget Warrawoona and producing gold bars in the not too distant future. From a value proposition point of view, as I say, we see a lot of upside in the price, especially this does not take into account Blue Spec. Any ratio you want to use, we've only used a couple here on EV reserve or EV production. We do see a lot of upside ahead, and we believe that that value will eventually get there as we move towards those gold bars. So in summary, we are fully funded to commence main construction this quarter. That will happen. That is a 90,000 ounce per annum operation, putting out a lot of cash with our hedging in place. We will increase production through the integration of Blue Spec. Those numbers will be coming out shortly. The team is building a fantastic team that's in there, that's been there and done it before. Regional exploration going on in tandem, and with all of the above, we certainly hope for a re-rate in the coming 12 months as a company. Any questions? We're outside of the booth. Look forward to having a chat, and thank you very much.
Thank you, Dave. Michael Fowler is the Managing Director of Genesis Minerals Limited, a rapidly growing WA gold company that's focused on developing a long life mining operation at its Ulysses project located just south of Leonora. Michael is a geologist with over 25 years experience as an exploration and mining professional with extensive corporate and operational management skills in the minerals industry in Australia, South Africa, I beg your pardon, South America and Africa. Please make him welcome, Michael Fowler.
Thanks, Jerry. Good afternoon, everyone, and thanks for attending today, and thank you to those online that have dialed in. It's been an exciting 6 to 8 months for Genesis, and we've really changed the company over that period. So today I'll talk about our recent exploration and feasibility work, let you know what we're doing over the next 6 months and where we expect to be in 18 to 24 months' time, and that is joining Calidus as a gold producer. So in June of 2020, we announced the acquisition of the Kookynie tenements, which are located just to the southeast of our flagship Ulysses deposit. The Ulysses project's located in the eastern goldfields of Western Australia. It's right where you want to be. We're surrounded by multi-million ounce gold mines, and we're in an area of world-class mining infrastructure. We're 30 kilometres south of Leonora and 200 kilometres north of Kalgoorlie. Importantly, and probably the most important thing, the project covers highly prospective rocks from a gold point of view. So the acquisition, together with all the drilling we've done over the past 6 months, the feasibility work has clearly shown us that we have the potential for a long-term standalone mining operation at Ulysses. Our resource stands at 1.3 million ounces at the moment and provides us with a great foundation to grow the company over the next 2, 3, 4 years. So in summary, Ulysses, the Greater Ulysses project, it's an outstanding asset. It's in a fantastic location. And we have a really clear focus where we're going over the next 6, 12, 18 months and how we're going to get there. And we're going to have plenty of news flow along the way. So just a quick corporate overview. We've got currently just over 1.9 billion shares on issue. got a market cap of around $140 million. And we're well funded to complete the current work programs and the feasibility work that we're doing. Got a really strong board and management team to take the company forward and get into production as soon as possible. And we've got a very supportive major shareholder in Alkane Resources who hold 20% of the company. So the acquisition, it's really consolidated a key bit of ground from our Ulysses deposit to Orient Well. The red shaded area you can see there is our 100% owned Ulysses tenements, and the orange area is the Desdemona South joint venture that we have with Kin Mining. So over the last 6-8 months, we've done a lot of drilling at Ulysses, and all that drilling is all about having a robust mineral resource to feed into the feasibility study. We'll announce that resource in the next 3 to 4 weeks, and that'll feed into the study. We're currently back drilling. The exploration team's doing a great job, and it's led by our exploration manager, Hayden Hadlow. One thing to note about the upcoming resource update, we see it as an interim one, and we'll be updating it again before the end of 2021. The feasibility study we're doing is on a standalone mining operation at Ulysses with ore sourced from both underground and open pit sources. Our COO, Chris O'Brien, is running that study, and that's going along very well. So the Admiral Clark, Butterfly and Orient Well deposits are located within the regional structural corridor that controls gold mineralisation in the district. I've highlighted that corridor on the left-hand figure there. Runs down from Leonora through Gwalia, comes down to Ulysses, swings around and runs east-west, then out the bottom right-hand corner of the slide there. That 15-kilometre long zone that I've highlighted on the right-hand figure is the best part of it that we've got, and this is where we'll be operating for many years to come. It's the same rock types and structures that host the Ulysses deposit that run through this whole area. So we've been drilling at Admiral Clark, Butterfly and Orient Well over the last 6 months, and the majority of that drilling is really about upgrading those resources and confirming the historic data. Recently, we've started to expand those resources. One thing to note, with the Ulysses deposit, when we picked that up in late 2015, the resource stood at 125,000 ounces. The last time any mining had taken place was in 2002, and the last time any drilling had taken place there was 2001. And as you can see, we've increased the resource substantially since we acquired the project. It's a very similar scenario at Admiral Clark, Butterfly and Orient Well, where the bulk of the drilling and the mining has taken place prior to 2002. So really it's been between 1993 and 2002. And since 2002, in the ground that we've acquired, there's almost been no technical work completed on it and no drilling. So we see it as a huge opportunity for us to repeat the success that we've had at Ulysses, at Admiral Clark, Butterfly and Orient Well. And if we can increase the resource base there by 6 times over the next couple of years, we'll be very happy. So looking at the various deposits that make up the resources over the next few slides, we'll start off with Ulysses. The current resource is 867,000 ounces. Importantly, we have a nice high-grade component of 695,000 ounces. This is a large mineralised system, stretches over 1.5 kilometres of strike. We've taken it down dip about 700-800 metres below from surface, which is about 400 metres below surface. We've done a lot of work understanding how to mine Ulysses over the past 18 months, and all that work will feed into the current feasibility study. In terms of drilling, over the next 6 months, we'll be upgrading parts of the inferred resource into indicated to allow us to bring them into ore reserves. The deposit is still open at depth and along strike, and there's plenty more work to be done here. Moving on to the Admiral Clark Butterfly area, this sits 4 to 5 kilometres to the east of Ulysses. Like Ulysses, this is a large mineralised system, stretches over 1.8 kilometres of strike on that plan view there. We've got a combined shallow resource at the moment of 246,000 ounces. We've completed over 150 holes here over the past 6 months, and we're really pleased with the results that we've got from that drilling. Looking at the Admiral area on this slide, the plan view on the top left-hand corner there, and 3 cross sections to the east of the old open pit there. And as I said before, we're really pleased with the continuity and the grades of mineralisation that we have seen here from our drilling, and we expect to be able to capture the majority of this mineralisation in one large open pit. Looking at Clark, we've put out some results recently on Clark. Again, we've got continuous near-surface mineralisation here. The nice thing about this is it comes to surface, which is great from a mining point of view. It's open at depth. We'll be testing the depth extents over the next 6 months. And Butterfly, which sits just to the east of the Clark deposit. Again, we've had some really strong drill results from there. It's open in all directions. We've actually identified potentially a new lode sitting in the footwall to the main Butterfly lode. And again, we'll be testing this in the coming months. So plenty of opportunities at all these deposits to expand on them. So in 2021, our exploration drilling will be all about expanding the existing resources that we have in the Admiral Clark Butterfly area, as well as looking at new discoveries. We've got 3 dolerite units, which is probably our preferred host rock in this area, that are shown on the plan there. And we've got numerous structures to follow up on. So we see a great opportunity here to significantly expand on the current 246,000 ounce resource. And just finally on Admiral Clark Butterfly, we're just looking at a very schematic long section here, looking to the north. So we've got Admiral, Clark and Butterfly there. Just to show these resources, this mineralisation is all open at depth. We think there's a number of other blind targets that run parallel to the known resources, and we'll be testing them in 2021. So moving on to Orient Well now. This sits 4 to 5 kilometres again to the east of Butterfly. Again, this is a large mineralised system. It's been drill defined historically over about 1.8 kilometres of strike. Our current resource sits at 61,000 ounces, and that sits underneath the northern part of the pit there, and it's highlighted by that red shaded area. Orient Well's a little bit different in that the main host rock here is within a felsic volcanic unit, as opposed to the Admiral Clark Butterfly and Ulysses, where they're more mafic dominated in dolerites and basalts. So it's a little bit different, but it's equally as well mineralised. We've done a significant amount of drilling here over the past 6 months, and the great thing is we've got numerous intercepts outside the current resource. On this slide, we're looking at a long section, so a section along the strike of the ore body. We're looking to the west. The red shaded area there is the 61,000 ounce resource area, and you can see there's a stack of really nice intersections outside of the resource area. Today we announced a fantastic result of 11 metres at 16 grams per tonne. This sits about 75 metres north of another spectacular result that we released last week at 14 metres at 6.5 grams per tonne. So it looks like we're getting a nice high-grade zone developed at the southern end of the pit there. All this mineralisation is completely open at depth, and we'll be here for quite a while drilling this out at depth and along strike. Just a couple of cross sections. A cross section on the left-hand side, it's through the high-grade zone that we've intersected. You can see it clearly there. And that mineralisation extends all the way to surface. There's another cross section there that comes from the centre of the existing open pit area there. You can see our drilling there, some nice consistent zones of mineralisation that we expect to be able to capture in a reasonably shallow open pit. Just on that right-hand slide there, I've highlighted a conceptual target. So we think this particular host rock, it's a felsic unit, and it's probably a subvolcanic intrusion, which means there's a real opportunity here. There's a number of blind units that haven't been tested before. So we see a real opportunity here to test for further felsic units, which are the preferred host rock in this area. So we'll be doing that over 2021. So while we've got all that drilling occurring near mine, near our resources, we've still got a pretty exciting exploration front. We've got about 40 kilometres of strike to test over the coming years. We've got a pipeline of both near mine and more regional exploration targets. One of those targets is the Archduke area, which sits just to the south of the Butterfly and King open pits there. We've got a 2 kilometre long zone of oxide gold mineralisation that we started drilling last week. So we'll have some news from that drilling in the next 6 to 8 weeks. On this slide here, it's really just a very simple mag image. It shows where the existing RC drilling is. And I'm just trying to show you some of the areas that we'll be targeting over the next couple of years. So the area between Admiral Clark and Butterfly and Orient Well, it's a 5 to 6 kilometre long area. We think there's about 5 to 6 mineralised trends through this area that have never been systematically drill tested. We think this is a fantastic opportunity. And we'll systematically drill this with air core drilling and then follow up with RC and diamond as required. Just to give you a flavour, there's a lot more. Outside all the work we're going to do around the existing resources, there's still a lot more to do within that 15 kilometre long zone that I've highlighted a couple of times. So just finishing up on the feasibility study. So that's on the development of a standalone mining operation there with ore sourced from both underground and open pits. We're just finalising a number of work packages. They've all been very straightforward. We've had a slight delay in finalising our resource estimates, but as I mentioned, they'll be out in the resources will be out in the next couple of weeks, and then we'll be able to finish off the study, and that's due out in the next quarter. So in summary, Genesis is on a firm path to establishing a significant new gold mining and processing centre at Ulysses. We're due to put out a new resource shortly, followed by the feasibility study. We've got plenty of work to do here, and we'll be updating the resource again late in 2021. Thank you very much.
Rob Tyson is a geologist with more than 20 years resources industry experience, having worked in exploration and mining related roles for companies including Cyprus Exploration Proprietary Limited, Queensland Metals Corporation, Murchison Zinc, Normandy Mining and Equigold. Rob is the Managing Director of Peel Mining Limited, a role he's held for 13 years since the company's inception. Please make him welcome, Rob Tyson.
Thanks to RIU Vertical Events and congratulations on 20 years. Doesn't seem that long. But then again, Peel's been going 14 years, so it's catching up. So Peel, look, our focus over the last decade has been on the Cobar Basin, and I think we're at a really important stage in our life. And essentially, we're hoping to become Cobar's next copper-dominant mining company. So looking at the corporate snapshot of Peel, we've been around, as I said, for coming up to 14 years in May. So we were born in the GFC, and we've certainly always, I guess, treated life accordingly, and we've treasured our issued capital. So after 14 years, 342 million shares on issue with no restructures along the way. Market capitalisation at the moment of around $92 million and about $5 million cash at the end of the quarter. Major shareholders include Hampton Hill Mining at 18.8%, and Josh Pitt controls Hampton Hill Mining. For those who don't know Josh, he's a pretty famous geologist who's made a lot of discoveries, including Golden Grove, one of West Australia's most significant mines. St Barbara Limited, number 2 on the share register with 12.2%, and directors with skin in the game, and we've certainly backed the company over the journey. 1 year share price, so you can see the fall away at the beginning of the year with COVID hitting, but obviously things have turned around quite a bit since then, and our share price has too. A 4-man board, so Graham Hardy and Simon Hadfield are both here today and should be at the booth, so if you'd like to come over afterwards and introduce yourself, that'd be great. Myself and Jim Simpson. Jim's based in Orange, mining engineer, and speaks to our aspirations to transition from exploration to mining. So Cobar, it's a fantastic mining jurisdiction. It's world-class, 150 years old last year. I'm not sure if anyone saw the Backroads feature on ABC last week. They went down the CSA mine and it was pretty interesting. And up until last week, they had the oldest mayor in Australia, I believe, who passed away, unfortunately. A lovely lady, 90 years old, 40 years as a local councillor, and quite formidable. It's the base metal endowment and precious metal endowment is very significant. It's the most significant polymetallic region outside of Broken Hill in New South Wales, which is obviously a hard act to follow. But most of the metal has come out of the mines you can see up the northern end near Cobar itself. So Endeavour has produced a lot of the zinc, lead and silver over the years. That went on to care and maintenance just over a year ago. CSA is down around 1,700 metres below surface, highest grade copper mine in Australia, or generally landing in the top 5 high grade copper mines in the world over the last decade or so. And then Peak and Hera. Peak is primarily gold, Hera is primarily gold, but they're all polymetallic, all with 5 metals generally, copper, lead, zinc, silver and gold, just the ratios varying. Our centre of gravity is in the southern part of the Cobar Basin. We've got these 5 deposits that we're drilling into, literally, to, I guess, upgrade them in preparation for mine development studies. They're all within about a 50-kilometre centre of gravity near Mayday and Mallee Bull. Excellent infrastructure. We control around 4,000 square kilometres. It's 100% owned as of a couple of weeks ago when our joint venture was formally dissolved on the Mallee Bull project with CBH Resources. So as a result of the consolidation of our asset base in Cobar, we've swung from primarily a zinc company sort of 6 months ago to now primarily a copper company. And our resource base has grown by over 50% as well as a result of that consolidation. Copper's a space we very much like, and we really want to apply our energies to increasing that ratio of copper in our portfolio to closer to 50%, and we think that's at hand over the next 6 to 9 months. So gold's time is now and has been, it's been a good couple of years for the goldies. And I've had this slide in here for a while, so copper's certainly is at hand too, in my view. And I think if you look at the copper price over the last 6 months, the market has woken up to it, that it can't stay where it is for the decarbonisation of the world to take place. The average grade of copper mines has been falling continually for the last 20, 30 years, and we're moving more dirt to get less of it. So a price step change is required. And I saw this morning on the back of the AFR Chanticleer, the BHP boss Mike Henry was talking about copper demand doubling in the next 20 years. So that will be hopefully something that comes to pass. Our deposits really require a hub and spoke strategy for us to consider developing them. So now that we own 100%, this model is possible. We had joint ventures on Mallee Bull and also on our Wirlong deposit that really precluded this sort of concept without making deals with our partners who really weren't very interested in the concept. So we're targeting a critical mass of 12 to 15 million tonnes of resources, and we think we can do that through the deposits that we've discovered over the journey or rediscovered. We've recently been in at Mayday and upgrading the resource there. So we completed that drilling just before Christmas, and we will have an updated resource out for Mayday, primarily indicated classification. That'll be coming out hopefully in the next month. We are also now targeting a maiden mineral resource estimate for Wirlong, and we've been doing some drilling there just over the last 6 weeks or so and had some very encouraging results. I'll touch on that shortly. Wirlong's a copper story. Mallee Bull's our initial discovery going back nearly a decade ago in the Cobar Basin, and it's a high-grade copper deposit. I'll touch on that also. And then Southern Nights is a zinc-lead silver-rich system, but with copper and gold as well. And we want to update and upgrade all these resources over the coming 6 to 9 months. So the hub and spoke strategy, the processing hub study was completed by GR Engineering. They handed it to us before Christmas, and it's a preliminary report, but they did go into great detail around all sorts of things, including operating and capital costs. But because of the nature of the study, there was very little we could actually publish to the market. So there's a flow sheet. And I guess the thing I'd point out about this flow sheet is it's pretty standard for a polymetallic circuit where you're trying to extract as much of the value of the minerals that are passing through the circuit as you can. It has a gravity circuit up front to look to extract the gold and precious metals where we can. It's then got flotation, so sequential flotation, copper, lead, zinc, and then there's a cyanide circuit at the back end as well. And the key to this circuit is flexibility, and GRs went into it with that frame of mind. So things can be turned on and off as required for the different feed types that we're likely to encounter through our different deposits. We've also done some work around ore sorting, and it looks very exciting. And I'd point you to a release we put out a couple of weeks ago. GRs are now updating their technical report to include ore sorting within it. But it's quite early days on the ore sorting, but we can see the ability to reject waste early at coarser size and reduce the amount of material going into the mill, but also upgrading the NSR value of the material. So Mayday was part of the Mallee Bull joint venture, and it really didn't get much attention under that JV. And the main reason was CBH, our partner, were most interested in trucking high-grade base metals up to their mill, and Mayday's a gold deposit and quite a bit of its oxide. So it wasn't going to work with a sequential float circuit with no gold capacity. But for us, it was low-hanging fruit and potential starter feed for this hub and spoke concept. So we put out a maiden resource on Mayday. It's about 1.3 million tonnes constrained in a pit, optimised pit, and it works out about 1.8 grams gold equivalent. It's a VMS style system. It's had the top ripped off, as you can see, for a heap leach back in the 90s. But the resource drilling we've done, about 11,000 metres, has been completed recently. We're targeting an indicated classified resource. This system's completely open at depth, as you'd expect for Cobar. We've had some very good hits along the way. These intercepts are part of broader, lower grade intervals, polymetallic again, but some decent gold numbers in there. So low-hanging fruit, and certainly something that we see we'll need to go back to. And if this resource allows, we may see if we can include some potential underground resources for it. Wirlong. So Wirlong's a discovery we made with JOGMEC, the Japanese government entity. They handed this project back to us when CBH had announced that we were doing a transaction with them. JOGMEC, I think, were largely there in support of CBH and being owned by Toho Zinc. We made this discovery, and I guess it was sort of too small, I think, for JOGMEC. But for us, look, it's a fantastic addition. It's high-grade copper, and the footprint of the system is very large. It's about 3 kilometres strike magnetic anomaly with geochem anomalism bleeding out of sheared volcanics and sediments at surface. Quite hilly topography. We're targeting a copper-dominant maiden resource for this, hopefully with a significant component in the indicated classification. Beautiful high-grade chalcopyrite, very similar to what's mined at CSA visually. And there's a happy geo. I'm sure you guys have seen a few lately. There's some of our early drill results up the top, and they're pretty stellar in their own right. We've taken a little while to get our heads around the structural controls at Wirlong, but we've started resource drilling for a maiden resource at the moment, had some early hits just before Christmas, and we've announced those just in the last couple of weeks, so those bottom three numbers there. And again, those intercepts were part of broader, I guess, lower grade, but still relatively high grade copper numbers. So Wirlong, watch this space, lots of drilling to come from Wirlong and lots of copper to come out of the ground there. Mallee Bull's our next cab off the rank. So once we've finished at Wirlong, our plan is to move to Mallee Bull, possibly in advance of completing all the drilling there, get a rig into Mallee Bull and start drilling this deposit out. The resource there is about 85% inferred at the moment, so we really need to switch the classification ratio around and upgrade it to primarily indicated classification. Classic Cobar style sort of pipe-like structure, starting quite shallow, massive sulfides around 60 metres below surface, and then going to at least 800 metres below surface before we lost it. I love Mallee Bull. I guess it's these assays, these intervals sort of speak for itself. You know, they were some of the best reported anywhere in the world going back sort of 9 years ago. And they're still sitting there. This system has not gone away, and we're looking forward to getting into it and getting lots of high-grade copper intercepts out of this deposit. So upgrade this resource prior to the end of the year. So we've got a primarily indicated classified resource there. Southern Nights Wagga Tank, it's at the southern end of our project environment, our tenements. We've got a high quality resource there, 5 million tonnes of inferred and indicated resource. It's about 60% indicated classification. It's averaging around 10% zinc equivalent. So it's a healthy grade. The resource was run through stope shape optimization, so it's certainly a conservative view of life. The system's open along strike and at depth. We haven't found the edges, the margins of this system yet. And the geophysics suggests, particularly to the south, that it's wide open for extensional drilling. And it's part of our plans again to go and do some strategic drilling, grow the resource, upgrade the resource, and then essentially looking forward, once we've gone through this process of upgrading all the resources, so Mayday's done, Wirlong's underway for a maiden resource, Mallee Bull and Southern Nights are next. Once we've completed all that work, that'll form the basis of conceptual study and pre-feasibility work, which we're hoping to get into by the end of the year. So we're a high-grade Australian copper company. There's not too many, I guess, in our space. And certainly the Cobar district is a great space to be in. We're going to be publishing a lot of drill results over the next 9 months and particularly targeting copper. And all of that is about delivering a new development in the Cobar Basin, a copper-rich development. So we've got a booth. Feel free to come by, please. Love to meet you. Thanks very much for your time.
Peter George is a mining executive, a mining engineer, and a mineral economics graduate of the School of Mines in Kalgoorlie. He has over 25 years' experience in developing and managing companies and mines in both Australia and Sweden across a large suite of metals. He's been the managing director of Alicanto Minerals since August of last year, having begun as chief executive officer in 2018. Prior to Alicanto, Peter has come from the highly successful Mineral Resources stable as a project resident manager, where he successfully brought the Wodgina mine back to life. Please welcome Peter George.
Great, thank you very much, ladies and gentlemen. It's nice to be here. Look, I just want to talk to you a bit about the renaissance of two projects which were once referred to as a treasury of Sweden, believe it or not. So two projects of such high grade and value that they were coveted by multiple Swedish kings and were instrumental in laying the foundation of a very wealthy country. During the time, Falun produced as much as 2/3 of Europe's copper needs, while Sala was known as one of the richest silver mines in the world at the time. To put that in context, between Falun and Sala combined, they've extracted over $27 billion worth US of copper, gold, silver, zinc and lead from the ground over the best part of 1,000 years. And I think if the Sala ore body was unmined today and its reserves were put up against all of the current producing silver assets, it would easily make the top 10 on contained metal, but it blows everything else away on grade. And I'll go into that in a minute. So these were very highly profitable mines in the day, but due to a lack of modern exploration before and after their closure, their potential has barely been touched. And if we find what we're looking for, and there's a lot of smoke about to suggest that we will, Alicanto's current market cap of 40 mil is going to stick in your minds as a missed opportunity if you don't invest. So just briefly on the corporate snapshot, we're very well funded. We completed a successful fundraise last year, late last year of $6 million. So we have $7.5 million in the bank, 326 million shares on the register. So quite tightly held with our top 10 holders controlling 35% of the company, together with the board and management controlling 13%. And look, and I'm very grateful for their support. A number of them are here today. And why Alicanto? So there are 4 things that I really want people to take away from this presentation. And look, number 1 being, we're very fortunate to be right in the centre of a tier 1 mining location in the Bergslagen of Sweden, with 2 historical projects with a high-grade production profile. And I'll come into that in more detail, but we recently announced this week that we've picked up the Sala silver zinc lead project to go together with our Falun project. We also have the right team and very well-funded team. I'll show you in the slide in a minute, but there are a number of familiar faces with a recent history of amazing success in Australia and overseas. We've got 1,000 years of geology and we've turned it on its head. In essence, the Bergslagen has been sport for having giant ore bodies popping up at surface that have been known about for over 1,000 years. But circumstances meant that there has been little to no modern exploration outside of these well-known areas, and our efforts so far are proving that there is life within, but also more than 300 metres away from these projects. We are also drilling now, and the upside, in my opinion, is amazing. We're just completing our 4,000 metre initial drilling program now, but we're rolling straight into an expanded 20,000 metre program, which is fully funded by our capital raise last year, and I'm really looking forward to a big year this year. So on the board and management side, as I hinted, look, the majority of the team that you'll see there will be familiar to you. I've got Ray Shorrocks as my non-exec chair. I have Didier in there as well, being a former chairman, also non-exec direct. A very Bellevue flavour to some of the people in there, and obviously with Mike Naylor and also Steve Parsons as a big supporter and one of my largest shareholders. A little less familiar perhaps will be myself and Eric, our chief geologist over there in Sweden. Look, I'm a born and bred Kalgoorlie boy, mining engineer, mineral economist. But more importantly, I suppose for Alicantos, I've got 6 years of experience working over there in that part of the country. Our chief geologist, Eric Lundström, he is the former chief geologist, exploration geologist manager for Boliden, has 6 major discoveries in his own right in Sweden, now working on his 7th for us. So Sweden. So look, I expect that many of you will not be aware of Sweden's very long mining history. As far as mining in Sweden goes, there are 3 major mining districts in the country, with the large iron ore mines in the upper north, the Skellefteå field in the lower north, and the Bergslagen in the south of Sweden. And these have all been known about for the best part of the millennia. Bergslagen is our main focus. It's world famous for being one of the most mineralised places on earth. And I can back that up, with the massive high-grade VMS skarn-style ore bodies that have been mined in the area over this period, with the Garpenberg mine owned and operated by Boliden, the Zinkgruvan mine owned and operated by Lundin, and now Falun and Sala, which are now under Alicanto's control but now closed. Look, having worked in Sweden for so many years, I've also found it to have many similarities with the Australian mining industry, having spent the last 20 years back in Australia. But I think it's the key differences are that, you know, even though Australia and Sweden are both tier 1 mining jurisdictions, I've got everything already in place. I have pro mining workforce. I've got my highways running right next to my door. I have a national railway running right past my door. I have deep water ports 100 kilometres away. I have hydropower, cheap access to power. My water is free and it's fresh, no salt, and everything, you know, all the high-speed communications are already in place. Nothing I need to worry about in that regard. So onto the Greater Farallon and Sala projects. So a lot of detail in here, but Farallon and Sala, they're about 100 kilometres away from each other. They're about 2.5 hours north by car. We've had a very busy last 12 months, so much so that we've re-engineered our understanding and the geology of the driving force behind the high-grade mineralisation within the Greater Farallon project and what we believe is driving the Farallon deposit itself. The discovery of copper gold skarn mineralisation at Wolf Mountain and Lustibul early last year Our most recent drilling campaign, which is now coming to a close this month, has been successful. We've now defined the stratigraphic sequence that hosts the Farallon ore body itself, and we've seen it repeated in our drilling at the Green Mile over 10 kilometres away. This is going to be a very important tool for us going forward, just to really help us vector in on the juicier parts of the system. This, of course, is no surprise to us, though, that given that the primary method for discovering ore deposits in Sweden leading up to the closure of the Farallon mine in the early 90s was a cheap but effective boulder tracing technique. You know, really that it's as simple as they'd be sending geologists out into the field to go look for boulders at surface. You know, if they'd find something, they'd bang a few drill holes into it. But as you can imagine, it leaves everything just under the surface basically untouched. So the addition of the Sala project, it's a really exciting project from my own personal perspective. I mean, I went down this mine with my father over 20 years ago and I've had a close eye on it ever since. But you know, the grades in this mine were phenomenal. You know, 1,244 grams per tonne average grade. And I think that's actually probably even undercalling it. It also produced 35,000 tonnes of silver, over 200 million ounces of over 200 million ounces of silver and over 35,000 tonnes of lead, I should say. It's only 100 kilometres away from Farallon. It's also a polymetallic skarn, very similar in some respects to Farallon itself. So the technology that we can use to explore is much the same. So it's a very logical step for us going forward. With the average grade, as I mentioned, 1,244 grams per tonne, this compares more than favourably with any current silver mine in operation today. In fact, I'd argue that together with the lead, you know, and a value of over $5,500 US per tonne mined, you know, that's historical production. That's better than most that you will see today. So if we can find some more of that, I'll be extremely happy. And we've got evidence to suggest that both Sala and Prince, and that with Prince is the ore body, which is only 300 metres to the southwest, which has also got some unbelievable size and grade to it as well, with over 37.2 metres in one hole, with up to 6.1% zinc and 50 grams per tonne silver in it as well, never been mined. But then on top of that, we also are very firm of the opinion that there has been no exploration, no modern exploration to the west, to the southwest of this, and we believe the stratigraphic sequence continues out there. So we can't believe our luck, and putting together our plans just at the moment for that being part of our expanded drilling program this year. This slide here, so just moving over back onto the Greater Farallon project, and that's really been our main focus for the last 12 months. So this photo, you know, this is of the Farallon pit and portal, which is abuts right up against our property. But this was a mine where they mined 28 million tonnes at some pretty amazing grades, you know, 4% copper, 4 grams per tonne gold, 5% zinc, 2% lead, 35 grams per tonne silver. I think we had pack partners take a look at this for us, and they've suggested that if this ore body was still there today, it'd be worth in excess of $1.5 billion to sell. And we're seeing very similar geology all the way along, as mentioned before, all the way over through to the Green Mile, over 10 kilometres away. So Green Mile to Falun. Look, ideally we're exploring for another Falun 2.0. As mentioned, the stratigraphic sequence is there, and we're better to try and find another ore body, but within close proximity to an old, well understood one. So the confirmation of that stratigraphic sequence of Falun and seeing it repeated over 10 kilometres away is very exciting for us. Not to mention the fact that we've also intersected disseminated sulfides within 30, 40 metres of surface. We're still waiting on assays to come back, but as you can imagine, this is really piquing our interest. And we're now completing the downhole EM on these holes, as they were only recently drilled in November, December, and combined with the reinterpretation of a lot of geophysical data that we're getting, this is going to form a major part of our drilling program over the next 12 months. So Wolf Mountain, that's a very important target for us. We don't understand it yet, but we've put a few more drill holes into this thing where we had a number of IP anomalies that we've targeted. The alteration zone on this is huge. It's now 2.5 kilometres long by 1 kilometre wide at surface. We haven't found the causative intrusion or the heat engine which is creating the mineralisation. That rock that you can see there in the middle, that's an 11.9% copper rock that we found in the historical workings at surface, had it polished up. So again, a focus for us going forward. We've been doing some more drilling in another slide, which I'll talk about here at Swamp Thing. We're actually starting to form some theories that perhaps Wolf Mountain and Swamp Thing are that big that they're about 5 kilometres away from each other. The causative intrusion that's creating the heat within the system is potentially affecting both areas. So the Swamp Thing, as it said here, giving up its secrets. And keep in mind that these targets, or these 12 targets that we've had, most of them have never had a drill hole put into them. They've been sitting outside 300 metres from the Falun mine itself. Swamp Thing is another example. We've put a drill hole into that. We've intersected semi-massive sulfide skarn mineralisation. Again, we're waiting on assays to come back that, but you can see the visual chalcopyrite. So we're expecting to get some nice copper intersections in there. Again, only 30 metres from surface. And also very interesting, we've hit over 340 metres of limestone, which is the perfect chemical trap for copper gold skarns. So again, with the downhole EM of these holes, this is going to form a massive part of our future going forward over the next 12 months. Finally, for the Falun project, just talking about Lustibul, this is one of the earlier projects that we drilled. As you can see, there's some amazing intersections with grades. They're 9.5% copper, 16 grams of gold, 285 of silver, 3.9 of lead, and 8.2 of zinc. And in the end, grade is king. So this is the sort of mineralisation that we're looking for. This has also been quite present within Falun itself. So again, another priority target as we move forward. And this intersection was only at 75 metres from surface. So ongoing news flow. Look, it's a pretty simple business plan for us at the moment. We've locked away our projects. We've got the Falun project. We've got the Sala project locked away. Now, a significant amount of field work has been undertaken in the last 12 months. We've visited over 2,000 outcrops and historical workings within the area. Eric now understands the stratigraphic sequence of what's going on within the area. So anytime we pick up a rock or we put down a drill hole, we know where we are. So really the next 12 months is just about drilling and more drilling, and obviously assays to come with it. Look, and with the 7.5 million that we've got in the bank and the mobilisation of a couple more drill rigs that are on their way, we expect that our news flow is going to significantly increase as the year goes. So we're currently working through our data at the moment from the most recent drilling campaign and what we've learnt during this time. The 4,000 metre drilling program is going to be finishing up imminently, but we're not stopping. We're just going to roll straight into the expanded 20,000 metre drilling program. But I'll get some more information out to the market on that as soon as I've got it. So just finishing on Sweden and just briefly touching on Guyana. This was the project that Alicante has had for quite some years. Even though it is a secondary project for us, I'm absolutely wrapped with what happened last year, where we managed to get a maiden independent JORC compliant resource of 500,000 ounces at 1.8 grams per tonne. Again, I won't go into too much detail there, but rest assured that we're working hard in the background there to try and realise as much value out of that project as we possibly can, and I hope to have some news for everybody in the very near future. So look, in conclusion, again, a story is very simple. Look, we're drilling for copper, gold, polymetallic skarns and VMS in a tier 1 mining area with world-class deposits right next door. We've got the right team and we're very well funded for a junior explorer with that $7.5 million in the bank. We've re-engineered the geology. We've turned conventional thinking on its head. We're looking outside the 300 metres away from the ore bodies. And with the application of modern techniques, the Greater Farallon project and now Sala are really starting to divulge their secrets. And as I said right at the start, with a market cap of only $40 million, we only need a little bit of success on the ground. And to be fair, we're aiming for a lot more than that. But we only need a little bit of success on the ground for our shareholders to greatly benefit. So thank you very much for your time, and feel free to come and see me in the booth outside.
Thank you, Peter. Before I introduce our next speaker, because you're going to dart off as soon as the speaker finishes, let me remind you of our offerings here, the 2 books, The Miners, which the proceeds of which are going to support the Meningitis Centre of Australia, and also Rocked in Our Head, Stories of Exploration from Mineral Deposits in Exotic Lands. It's a good read, this one. It's not all geology. There's some fun stuff in there. I shared yesterday with you the story of the dog. I won't go there again. Mining engineer Mark Zepner is the managing director of Ramelius Resources. He was educated at the WA School of Mines in Kalgoorlie. He has more than 25 years experience, including senior operational and management positions with WMC and Goldfields Limited at their gold and nickel assets in Australia and offshore. He joined Ramelius as Chief Operating Officer in March of 2012 and took up the reins as CEO in June of 2014 and as MD in July of 2015. Please welcome Mark Zepner.
This year, although this time you'll have to put up with a mining engineer imposing on what is traditionally an exploration geologist's gig. I am trying to fit in though. I have removed a picture of an open pit and replaced it with a long section, which shows the limit of drilling, but more importantly, some colorized grades of that drilling. On a more serious note, the Ramelius story is an Aussie gold growth story. With, in recent years especially, that success coming from exploration, success just as much as it's come from M&A growth. Please read this disclaimer at your leisure. It's available on our website along with all of our prior presentations. Now let's start with the corporate summary. Market cap is around 1.2 billion, a little less today, giving us an enterprise value of less than $1 billion. Our share price has suffered as much as anyone's in the recent gold market pullback. I would argue an excellent buying opportunity. We are an ASX 200 listed company, cash and gold tick over $220 million. We produced 230,000 ounces in FY20. This year, on current midpoint of guidance, we'll be at 270,000 ounces, which will be a new record for the company. The share register is now over 60% institutional, and we have a healthy group of 8 analysts now covering the stock. Effective 1 January, probably in the room somewhere, we welcome Bob Vassie to the fold as chair. As you all know, Bob is an experienced mining executive, and we look forward to working with Bob as we grow the company into the future. Whilst it's always been a critical part of what we do at Ramelius, the level of reporting required around safety and ESG is only increasing, which can only be a good thing, right? Ramelius now has a dedicated risk and sustainability committee at the board level, And we significantly increased our reporting in terms of sustainability included in our 2020 annual report, if you're interested. We are endeavouring to reduce our injury frequency rates, remain very active in the communities that we are operating, and also look to minimise the environmental impacts from our operations as much as possible. As I stated at the outset, Ramelius is a growth story, and this chart tries to capture that. We've seen 21.5% year-on-year production growth over the last 6 years, leading to an expanding margin between the price and the cost of our product, with a further 17% growth forecasted for this year. This margin over all-in sustaining costs has therefore increased from around 20% to 42% in FY20. As the chart shows, if we deliver on our FY21 forecast, then this margin is looking to expand further. Before I talk about the overall mine plan, let's have a look at FY21 in a little detail. As I mentioned, we're guiding for between 260 and 280,000 ounces at a midpoint of $1,280 an ounce all-in sustaining cost. In short, for the first half, so far, so good. We are ahead of the game. If you look at the chart, H2 is slightly less than H1, although there's work underway and there are some opportunities for us to improve in Q3 and Q4, and we're looking to make that happen. On the cost front, we expect to remain largely within our guidance range of between $1,230 and $1,330. However, we are seeing some wage cost pressures creep into the business, particularly in the areas of geology and surveying. Notwithstanding that, a more heated labour market, if you like, we're confident in that our cost forecasts can be met going forward. In terms of the 1.45 million ounce mine plan released June last year, we have production levels established around 250,000 ounces per year. Mount Magnet is in yellow, which also includes Vivian. The Penny project is in orange, which is associated or will be trucked to the Mount Magnet mill, and in blue represents Edna May, Marda, and more recently Tampia. As I just alluded to, we are ahead of guidance for the first half of the year and also in the lower part of the range for costs. One of the potential opportunities to increase output for the remainder of the financial year is an earlier start at the Tampia project, which currently in the life of mine schedule was not due to start until July. Looking further forward, we see an opportunity to both increase production and extend mine life through projects like Eridanus Underground, the nearby Orion Franks Tower area, and also at Edna May with the larger Stage 3 cutback, details of which were released only a couple of weeks ago. We look forward to updating the market in July, or around July of this year, with what we hope is a bigger and better mine plan from FY22 and onwards. That was RMS on a consolidated basis. If we look at the two main production centres, and I'm sure you've seen this map before, it shows Mount Magnet and Edna May, which I've already mentioned. The arrows show the higher grade feed sources that we're trucking into those milling areas, which are predominantly filled with lower grade, larger tonnage base loads at each mill. Where Vivian to the north, despite the different distance, has been one of the most profitable sources within the company. We also plan to truck the even higher grade ore from Penny to the south once that project is fully developed. At Edna May, just outside the township of Westonia, we are bringing the Marda ore from the north of Southern Cross, and we're planning to truck the Tampia ore from Narrabeen, which is to the south. Typically, our assets are located close to major regional centres and road haulage routes, and we have a large amount of well-established infrastructure, particularly the mills. It's this sunk capital that underpins a key part of our growth strategy. Just looking at Mount Magnet, I think Mount Magnet's pretty well summed up by the title. It keeps on delivering. Over 100 years of mining history, plus 6 million ounces of production. Yet we're finding new ore bodies such as Eridanus down in the bottom left of this 5x5 aerial photo, only a few kilometres from the mill. As mentioned, the Murchison area has got a rich history. It's well serviced from Perth, and we still think there's plenty to offer in the area through maximising existing resources as well as finding new resources such as Eridanus. The plant is efficiently run, operating costs below $20 a tonne. We recently announced that the economics of a planned expansion to 2.5 to 2.7 from the current 2. Doesn't quite stack up on a $30 million capex. But this analysis will be revisited once we've completed the underground scoping study at Eridanus. Additional mineral inventory will clearly add to the value proposition of an expanded mill. At Edna May, the mill and operations in the centre of the map there, we're not looking at 5 by 5 kilometres, we're probably looking at 200 kilometres top to bottom, at least. 2.6 million tonne plant at Edna May, fed by currently the Edna May underground, the Greenfinch open pit, and also supplemented by approximately 2 gram per tonne material coming in from Marda, some 170 kilometres to the north. The recent acquisition of the land at Tampia and purchase of the 10% minority interest now paves the way for that project to add high-grade ore closer to 3 grams per tonne to the mill from FY22 or possibly earlier onwards. Brief update on each project, being mindful of time. Penny, one of the highest grade gold mines in Australia at 14 to 15 grams. We're looking to obviously get that into production as soon as physically possible. I've seen a few different colours of magenta blocks. Our magenta blocks here, by the way, are plus 20 grams. We released the feasibility study results last quarter, and as you can see, the metrics are incredibly strong. The decision from the board to begin construction did bring forward some capex into the FY21 year. From the $34.5 million total capex, some 16.1 million came into the FY21 year, and you can see that circled. Given the very high grade nature of Penny, we're looking to fast track its development, obviously, and look forward to the reduction in the overall company all-in sustaining costs that will be driven by Penny once it's into production. At Eridanus, we already have a decent sized 500,000 ounce resource. After the success of the stage 1 open pit, which you can see in section, and we decided to start the stage 2 cutback in June last year, and that will mine to a depth around 230 metres. This is my previously mentioned long section, by the way. I'm not sure if you spotted it, where the depth of drilling from Eridanus, some 2 kilometres north to Frank's Tower along the granodiorite, is relatively shallow. Other than at Eridanus itself, we're only scratching the surface, and some recent results we released at a place called Orion is a testament to this. Coming back to Eridanus, we're in the middle of a deeper diamond drill program, drilling to a depth around 600 metres, which you'll see on this slide. The first 4 diamond holes have shown some exciting numbers, the best of which you'll see on the second lot of numbers, the bulked up numbers on the left-hand side. Second one down, 245 metres at 3, shows that there's some real underground potential here at Eridanus. The diamond drilling of the 12-hole program has progressed a little slower than we would have liked, given some of the rig positions in and around an operating open pit. But we still now aim to complete the resource model and the scoping study by the end of June. Fingers crossed the labs can get us some results back in that time. The study will also include potential development of adjacent deposits like Orion, which is showing very strong open pit and possibly even underground potential. And also may offer a better portal position for access to both the Eridanus and Orion underground if it's possible. On the Edna May, we recently, it's a few months ago now, I think, announced an overall resource or an increase to an overall resource of 1 million ounces following an underground, pretty intensive underground diamond drill program and resource model update. The Edna May project, given that 1 million ounce resource, contains the largest single endowment in our portfolio and therefore commands obviously a significant investment in time and resources to optimise that resource. As we announced a few weeks ago, a large stage 3 cutback mine concurrently with the existing underground operation offers the best financial returns, potentially adding many years of life to Edna May. We are moving to a pre-feasibility study on the stage 3 open pit with expected completion by the end of June. At Tampia, to the south, next project being developed, well advanced with the longer lead items we've been working on for some time. At the mill itself at Edna May, where the ore will be processed, work's already been completed on a vibrating screen and a leach thickener. With the successful land purchase and acquisition of the remaining 10%, we're now well into the statutory approvals processes. You can see from the picture here that work's already pretty much complete on the camp, just outside of the small township of Narrabeen, which is in the background, and work will soon commence on road upgrades along the haulage route. There's actually a lot of activity going on down at Narrabeen, not something you often see, I imagine, getting this project into production. Now, despite a very good year in FY20 and quite a positive start first half of FY21, what makes Ramelius still a good investment? Well, part of it is the inherent value that lies in some of the 4.7 million ounces of mineral resources on our books that are yet to be fully defined or developed. At present, none of these projects or prospects exist in the current mine plan. Projects such as the Eridanus Underground, the associated Orion Franks Tower area, and the 500,000 ounces still sitting there at Galaxy Morningstar areas of Mount Magnet. There's significant leverage in terms of these ounces that could be added to the mine plan. And also at Edna May, we've just talked about the 1 million ounce resource that's sitting there looking to be optimised. It's about finding the best return for the assets we have in the ground. Speaking of returns, we've got a pretty good track record in terms of generating returns from our M&A growth projects, right back to the early days, indeed the Coogee project back in 2012 even. What I've got on the graph here is by project, purchase price in blue, cash generated in yellow, and the net cash being the red dot, and we're looking to update this quarterly. We've established a reasonably positive trend here with, increasing investments over time, but for larger and larger returns. And whilst Vivian, Edna May and Marta are all in production, we remain confident in generating similar returns for our new projects at Tampia and Penny that are obviously now on track for development. Our balance sheet remains such that we are able to consider any new opportunities as and when they arise. And finally, what's our focus for this year? What has been our focus? To continue operational excellence by achieving guidance as we have done, managing our costs as we have done, improving our safety as we endeavour to do, and then delivering on our organic growth projects, which we're well on the way to doing. We're committed to significant investment in exploration, some 25 million once you include the 5 million we've slated for the Penny project. We're always on the lookout for accretive acquisitions, the type that will deliver a step change for the company, and believe we're well positioned to capitalise on the right opportunity. We'll continue to manage our capital in a disciplined manner and retain a strong balance sheet while recognising that dividends are also an integral part of any shareholder-focused company. Lastly, we'll always provide the market with regular updates, largely driven by our mining and processing studies program. Always a good picture to finish on. Thank you very much and enjoy your afternoon tea.
Thank you, Mark. Now, we're running about a half an hour late, so I'm going to make an executive decision, and we're going to contract afternoon tea to 15 minutes. All right? Sorry about that.